I think wealth can mean so many different things to different people. For me, wealth isn't necessarily the monetary value that most people would associate with it. For me, wealth is the ability to make choices. So if you consider yourself wealthy, that gives you the choice to travel, play golf, spend more time with the kids, whatever it might be that is most important to you.
Okay, welcome back to the Rabasha Family Podcast. Now we have a very special guest. We have the CEO of Bricks to Wealth, Tim Watson. Now, guys, do you ever dream of just getting out of the rat race and retiring early, moving into a career you love, or just having the ability to choose how to spend your time? Have you ever considered investing in property, but you've had limited success due to being time poor, suffering from analysis paralysis or fear, or buying from the wrong property? If you know exactly what I'm talking about, Tim, the person right in front of you, has been through that journey. He's been able to grow cash flow through positive portfolio, and it has enabled him to transition from a corporate career and follow his passion to investing in property. He became the founder of Bricks to Wealth, a portfolio strategy and buyer's agency to help other investors in property to achieve their wealth and retirement goals. During his journey, he's personally used buyer's agents to help scale his own property portfolio. He's been able to see the good, the bad, and understand the many challenges of property investment, including being time poor and suffering from analysis paralysis, and how he's been able to build Bricks to Wealth with his passion, offering a premium property portfolio strategy and a buyer agent service that supports you guys in growing your wealth through data-driven and strategic property investment, helping you to invest in the right market at the right time. So Tim has been passionate about this with an aim to have such a great experience with your first investment property purchase that you continue to use and be able to have this passion to get more and realize that vision that you have, that you've been able to develop with Bricks to Wealth and Tim. So thank you so much, Tim, for coming on the show.
Sujira, it's an absolute pleasure to be here, mate.
No worries at all. So talk to us a little bit about your career. So you went from you had a corporate career into now where you are now. How did this journey start? And what were you thinking during that time?
Marketing is all about storytelling. Dad, when we first started this business, what did you say to me?
I said, yes, we do a podcast.
Why?
Because I want to tell our story.
Why?
Because I know the story builds a legacy.
Builds a legacy. And that is exactly what we do here at ETS Rabasha Media. We market your story on social media so you could build a legacy for those who come after you, to build your business and your personal brand.
Yeah, follow us on our platform. Go on our website, etsrabashamedia.com.
This is about legacy, and it is about showing up on social media every single day, because if you don't show up, your competition will.
Yeah, great question. And it's been a long journey. It's crazy how time flies. But I think I followed the path that most people do, which is I took the safe route of going into a corporate environment. Back in the UK, which is obviously where I'm originally from, I did my MBA back there. Then I joined the pharmaceutical sector and then moved to Australia in 2006 and joined another pharma company here. So I've spent over 20 years in corporate and pharmaceutical. Look, I was very lucky with the companies that I worked for, and in particular one company which I stayed with for 17 years and worked with great people. But I never absolutely loved the job. And my goal had always been to find something I had an absolute passion for. And so, essentially my final role with this pharmaceutical company was essentially I got made redundant, but very happily redundant after 17 years. And so I then had a choice of whether or not I wanted to go back into pharmaceutical or really follow my passion, which is real estate investment.
Wow. And so you talked a little bit about the analysis paralysis. Like, what do you mean by that?
So while I was working in pharmaceutical, I wanted to take control of my retirement. And I knew, look, super was okay, but I didn't think it was going to get to where I needed it to really have full control over having a comfortable retirement. And I didn't want to work until I was 67. So the investing in rental properties as a whole became one of my passions while I worked in corporate. And the analysis paralysis, to answer your question, I suffered from that for years. So I started listening to podcasts and hearing from other investment property professionals, but it took me at least 2 years before I finally pulled the trigger and bought my own investment property. And even then, when I finally made that choice, I bought a unit on the Gold Coast just purely because I'd been there. And it was the worst investment, or not necessarily the worst investment, but I certainly, with hindsight, I could have made much better investments, knowing what I now know.
Wow. Powerful. And can you talk to us a little bit about your corporate career?
Yeah, absolutely. So I worked in a whole variety of sales, marketing, business development. I transitioned between a whole range of different roles. And I think I'm very lucky in that while I worked in pharmaceutical, I had that opportunity to work in a number of different roles. And I stayed with the same company for 17 years for a very good reason.
Wow. Okay. And then, so what do you look for when it comes to like buying a property? What, like, you know, when you founded Bricks to Wealth, what's the exact journey that you go through, that you take people through?
Yeah, so just a little bit of background before I answer that is that my journey as an investor was that initially I tried to do it all myself. And as I said, my first investment certainly wasn't the best one. I really didn't want to pay a buyer's agent a fee because it seemed like a lot of money and I wasn't sure how much value I'd get from it. So it was when I came round to buying the second investment property, I actually got a buyer's agent to support me with that. And I saw the value that came from it. And particularly with, it allowed me to really fast track my portfolio growth. And that's one thing I've learned is the quicker you can move, the quicker you can benefit from the compounding growth that comes from hopefully picking the right investment property. So since then, I've used a number of different buyer's agents. And I've actually worked for one of the largest buyer's agents in Australia. So that's given me the personal experience, but also the experience of having worked for a big buyer's agency to know the processes that they go through to support clients effectively. And so to come back to your question of what process do I go through, I think you've got to start with understanding each client's goals. And so the first part for me is the portfolio strategy component. So that involves understanding clients' passive income goals, equity goals, when they ideally want to retire, their income, and so therefore their ability to purchase multiple properties. And I then use sophisticated modeling software to map out a plan for them and provide different scenarios as to how they might proceed. So that's the first part, is just really understanding the goals and mapping out a plan, because without a plan, you're doing everything blind. And so it helps me to anchor with clients on what we're trying to achieve and how we're going to get there. The second part is then really all about understanding that there's thousands and thousands of suburbs, as you well know, around Australia. For clients, I buy nationally. And I only buy residential investment properties. I only buy established housing, so I don't get involved in developments. I don't buy units or townhouses because of my personal experience that I actually think established housing is the best way to build wealth through property. That's my personal experience. I'm sure others might disagree that there's other ways to do it. But I think the first thing you've got to do is really understand the market you want to buy within, and specifically the suburb. And I use very sophisticated data analysis that looks at over 80 different metrics. So things like what sort of infrastructure is going into an area, what the population growth looks like, supply and demand factors, so stock on market percentage, inventory levels, building approval percentages. So it's very sophisticated data analysis that enables me to give clients a report that shows capital growth potential, cash flow, and risk analysis for the suburb. And that then allows me to then compare different suburbs for clients so they can make a choice as to where we want to focus.
So as we go on to that, just really very, very quickly, on this journey, like, what are some of the goals that your clients have? What are the goals that they have when it comes to building wealth through property? Like, you know, because I can imagine, like, you know, being able to have this dream, but like, where do I start? And how do you go on that journey? And how long does the journey with them even last for?
Yeah, and the answer to that final question is it's very client specific. So I've worked with clients who are in the late 20s and really starting from scratch, through to clients who are later in life and getting closer to retirement. And so that portfolio strategy modeling that I go through can be very different because of the different timeframes that you're working on. And to answer your question, look, from my experience, most clients just want to be able to live a comfortable retirement. And most clients want to fast track the control on that. If you've got the choice of, and again, it's about choices. So you might really enjoy your job, but do you want to have the choice of having to work until you're 67, or do you want to be able to retire when you get to 50 and have that decision that you can make because you're financially comfortable? And so for most clients, that's really what it's all about. But most people want to invest in property because they think it's a good way to build wealth and it will help them to achieve their retirement goals. And look, I need to point out, I am not a financial advisor. So I would always recommend that you build an A team around you if you are considering, well, firstly, how your retirement plan, what that looks like, but also if you specifically want to use property, you need a really good accountant. You might want to have a financial advisor. You definitely want a mortgage broker who can help you with the loans. And I might be biased, but I think a buyer's agent adds a lot of value with regards to taking you out of your comfort zone of investing in your local area and being able to work with you about how to actually build a really strong portfolio. And to take control of retirement, realistically, you need a portfolio of properties. That might be 2 or 3 for some people. It might be more for others. It all really depends on what their goals are and what sort of passive income they're trying to achieve and equity growth over time.
Very interesting there. You talked about like you believe just personally that established housing is the way. So you don't do off-plan projects, so you focus on established housing. Why do you think that is the way to build wealth through property?
Yeah, and look, I am very much influenced by my own personal experience. Now, I'm not saying that investing in a development isn't a great way to make money. For some people, investing in a unit or a townhouse might be the only way that they can get started. And I absolutely would advocate that somehow you get started because you want to be in the market. There's also data out there at the moment that because of affordability concerns, units in some areas are growing faster than houses. But from my personal experience, firstly, buying a house, you're buying the land, and the land appreciates over time. And for most clients, I would recommend you do minimum of 400 square meters for the land component. The other factor is you've got then control, as long as you're meeting obviously any local council regulations, you've got control over what you want to do to the house, whether you want to repaint, build a granny flat, whatever you want to do to build further wealth is within your control as long as you meet those planning regulations. And the other thing with established housing is, one thing I always do for clients is I will provide an estimated range of value. And I do that by looking at comparable sales in that local market as close as possible in time. And I think it's easier to do that with an established house. And you can also minimize risk through things like building and pest inspections, due diligence around flood mapping, bushfire, all the other things that come with it. But that's my personal experience, is that, I think established housing is a good way to go and a good way to build wealth over the long term.
So, okay, before I ask you my next question, so if I come to you and say, hey, Tim, I want like multi-units, is that something that you could do as well?
So it's interesting. You talk about multi-units. The one caveat I would say to not investing in units is if you can actually buy a block of them that you have control over. Because again, you're then buying that block of land on which the unit situates. You are then buying the land component and you've got control over it. So yes, that is something that I think is another alternative way, and that often comes with much higher cash flow. So that can be effective. And look, the one thing I would say about, I think the question a lot of clients ask me is, why would I want to use property to build wealth compared to, say, shares or cryptocurrency? Now, I might be getting a bit old, Sujira, but cryptocurrency, I wouldn't have a clue as to why you would want to invest in Bitcoin. For me, it's not actually tangibly worth anything. But there are obviously a lot of people that think very differently to me. But the concern I have with it is so volatile. as every time Trump sneezes, Bitcoin crashes or rises by God knows how many percent. And I would rather have an asset that I've got more control over and that I think is a more stable journey. And for me, my experience with shares has been very similar. I have had limited amount of success with investing in shares. Some companies I've invested in have gone bankrupt. Some have doubled with regards to the shares. But I'm no expert in share analysis. The benefit I see in property, one big factor is leverage. And that's the concept that if you want to buy a house, you can put down a 20% deposit plus whatever your buying costs are, so stamp duty, etc. But you can borrow 80% from the bank. And so you're using someone else's money to actually build your wealth. And I think that is an astounding way to actually be able to build a portfolio. And then you also get the benefit of how you build your wealth. Firstly, capital gains over a long period of time is important, but also hopefully you're buying in an area that has a tight vacancy rate, and that it's more likely to mean you're able to push rent up over time. Now, a lot of markets now have you can't change rents for a minimum of 12 months. So you need to be aware of state by state implications, but it's still a great way that, like, my long-term goal personally is all of the houses that I now own, I'm paying off on principal and income payments. So after the 30-year loan, it will be completely paid off. I'll have the benefit of that having appreciated over time, but I will then also have the benefit of all the rental income that comes in from it without the major expense of the mortgage that's been associated with it. So I think those are just some reasons why, for a lot of people, property is an excellent way to build wealth.
You talked about finding a place that has a good vacancy rate. Can you talk a little bit about that?
Yeah, so vacancy rate essentially is, if you think about the number of rental properties that there are in an area, it's the comparison of how many rental properties are there, and a vacant rental property is a property that's actually been listed on the market for more than 21 days. So you take the proportion of that compared to the available rental dwellings, and that gives you an idea of how quickly these rental properties are moving. So ideally, a good vacancy rate in a target market falls between sort of 0 and 3%. If it's less than 1%, it's very, very tight. And what that tends to mean is you've got a lot of renters fighting over the same properties, and that can enable you to maximize your rental income over time. So it's just one factor I look at for clients is not obviously, primarily we want to make sure that the capital growth increases over time, but you also want to manage the cash flow, because the more cash flow that you can generate from a property can actually play a big part on being able to then get and invest in your next property and ultimately building your portfolio.
So to get that correct, if the vacancy rate is low, like a lower percentage, that's a good thing, because that's where, but isn't that a problem of like oversupply in the area, that if there's too many places there, then like what's going to make me come and stay at your place and rent? I can go get another place, maybe at a cheaper rent. Wouldn't that be a problem?
Okay, so you talk about the other absolutely key range of metrics which you need to look at, which are your supply metrics. So for me, there are three particularly key ones that I always look at for clients. One is the stock on market percentage. And stock on market is essentially the amount of stock that's for sale in an area compared to the total number of dwellings in that area. And so if you've got, again, a relatively low stock on market is a good thing, because it's got very tight supply. And if you own a property there, hopefully your prices are going to increase, compared to if you have a lot of stock on the market, is probably going to dampen the capital growth that you're going to get. The other key thing is inventory levels. So inventory is often known as months of supply. And the way that you look at that as a metric is you basically take the number of properties that are for sale. You look at how many properties get sold month on month, and say you've got 30 properties for sale, 10 sales a month. That would be 3 months worth of supply, and that would be a pretty balanced inventory number of months on supply. But it's important that you know how quickly the properties are moving, And the final bit is building approvals. So back to your question about if there is a massive amount of stock that's about to come to market, that will not only dampen capital growth potential, but it will also potentially impact the number of rental properties that you might have in the future. So if you've got a really high number of building approvals going through, so that would be the number of properties that have been approved over the next 12 months, that's a concern. If you've got high building approvals or you've got a massive development site that's going in, that can change. It can also, in some respects, it can be positive and negative. Because what sometimes happens is when you get a whole new development area going in, it actually raises, it's obviously new build, and there's only a certain proportion of the population that can afford that kind of market. That then actually increases the socioeconomic factors. It often comes with more infrastructure that's going in. So it can actually be a very positive thing. But the other downside is if you get too much stock on market. So hopefully that answers your question, that you've got what I look at is a whole range of supply factors, demand factors, vacancy rates. And it's really, you've got to look at all these metrics together. So you can't just look at one thing and think that's going to be, good. Like clearance rate. People always talk about clearance rates. Clearance rates, don't get me wrong, it's important, but you've got to look at all the other metrics that go hand in hand to really identify your absolute gold suburbs.
And what would you say, what is a clearance rate?
Clearance rate, to my understanding, is when you go to auction, the number of properties that actually sell.
Okay.
So yeah, like if you've got very high level of clearance rates, that's a very strong market. Most of the properties are selling. Conversely, if you've got very low clearance rates, properties for whatever reason aren't selling. And that can be an indicator of a much slower market.
So you talk about the journey of building that passive income portfolio, to be able to have that cash flow. How long does that take? And how many properties would you say, one would need to have to be able to, when they do retire, they can have, I don't know, is it 1,000, 2,000? Like if we're going to put in a live case study here, let's say I come to you and say, hey, Tim, I would like to earn, how much would it be? I'm living in Sydney, so cost of living is, so I say, look, for me
to worse by the day.
Exactly. For me to be able to retire well, I don't have to rely on pension. I don't have to rely on any of these things. Let's say, oh my goodness, maybe 100,000 a year through property. I mean, I'd be pretty happy through cash flow. What does that take, and how long would that take?
Okay, so it's an excellent question, but it's a question of, it depends. And the reason it depends is everyone's situation. Every client I've worked with, their situation is unique. So I talked earlier about the age at which you start is actually really, really important. I've got one client, she's in her late 20s, and I'm now buying her second property for her. I'm glad to say the last one that we bought, which was just under a year ago, has already gone up by 25 to 30%, and we've just had it revalued. So she's now in an excellent position where she's got really, really strong capital growth from that first property. She's working with a mortgage broker to get, and she's now got funds to go for the next one. So we're now looking in a completely different market because you want to spread risk. And equally, different markets perform at different times. Right now, if I'm buying now, Melbourne, for instance, actually, there's a lot of suburbs in Melbourne that I think look very, very strong. Last year, Brisbane still looked like a really strong market. But my point is, it depends on how soon you start. Like if you tell me you want to get $100,000 in passive income and you're starting in your late 20s, then I think that's very, very achievable. You could probably buy now, and the quicker that you can buy the properties, the more you benefit from the compounding growth. It might take 3 or 4 properties. Let's say they're $750,000 per property, 3 or 4 properties for you to benefit from some really, really strong equity growth. But also, if you think over that sort of 30-year period, 25, 30-year period, hopefully your rents are going to go up considerably. And you've then got an asset at the end of it, which doesn't have a mortgage associated with it. So getting to $100,000, and by the way, when I model it, we are always looking at $100,000 in today's money. So $100,000, 30 years from now is going to be a hell of a lot more than $100,000 because of inflation. So you've got to allow for that in the modeling. Now, if I compare that to another client who, say, for whatever reason, hasn't invested in property but is starting in their 40s, they're either going to need to move very, very quickly. And that could mean buying, and it also depends on capability. They'd have to have a relatively high income to be able to buy some properties quickly. But you could buy a couple of properties each year, and then you pay it off. You might pay it off more aggressively if you can, so you can pay down the asset. But you can imagine the two different scenarios can be very different. One is the starting point of the journey. The other is the income potential for that person. There's a whole variety of factors that determine the end point.
Wow. Okay. So I think it's very, very powerful, like being able to have this conversation, for people to understand what this takes. But what I want to know is, like, let's say, for example, one of these, young ladies you were just saying, but if you're getting 1 and 2 and then maybe 3, 4, 1, 2, those are mortgages you're saying. How are you able to pay off all those mortgages off at once? Doesn't that become quite expensive, or does it depend on your income to do this?
Absolutely. So the mortgage broker is always going to look at a range of different factors. Your income is going to be a very, very key part of it. So you can imagine if you have two relatively high income earners who are working together to build a portfolio, that's quite different from a single person trying to build a portfolio, even if they have a relatively high income. The mortgage broker is always going to look at the money coming in, the benefit of owning an investment property. And actually, I'll touch on rent vesting because I think this is appropriate to this discussion. Rent vesting is the concept where you might live in Sydney and you might love living in Sydney, but you have no chance of affording a house in Sydney, but you want to get into the property market. So what you would then do is you would actually invest in a property in another suburb, and it might be in fact, it would probably be in a completely different state. It might be Melbourne, it might be Brisbane, but you would buy an investment property within your means, and then you would rent that out. So you are at least in the market. You should have chosen a market that has really good capital growth potential, and ideally one which you're going to benefit from a full market cycle, because that's where you're going to get real value for money over the longer term. And that way you're in the market, you've got a high performing asset, you have rental coming in, and that rent coming in will also be taken into account by a mortgage broker when it comes to looking at your serviceability for a second mortgage. And so that's how people build a portfolio. Now, for some people, you buy one property, it might be a few years before you have the capability to buy a second property. And by that point, hopefully your first investment property has gone up. You can then take into account any equity that you've got in that property, and that will influence your ability to take out another mortgage. So this is how you can actually build quite a decent portfolio, but you have to have the right people supporting you. So I've talked about the accountant helping you with which vehicle you buy within. So are you buying in your own name? And a lot of the time, buying in your own name will make sense for the first property. You might then, if you've got a family, you might want to buy in a trust. You might want to buy within your self-managed super fund, depending on how much money you've got within it. So there's a whole range of different ways that you can build a portfolio. And then your mortgage broker is key in finding the best loan for you and enable you to actually get into your next property.
Quite powerful. I think this is very interesting because there's so many people out there who have been thinking about this, Tim, who want to be able to do this. And I think there's so many topics we can touch on. And that's something maybe we could be doing is just, having a topic, even if it's once a month, coming together and, okay, what about this? And what about this? And really taking people through this journey who want to be able to come and do this. What's your end goal? What does 10 years look like for Tim 10 years from now?
So it's a great question. So, I've shared my journey of moving from corporate to starting my own business. And the reality is, at the end of 2022, when I made that decision and took the redundancy, it was already with the master plan that I wanted to start my own buyer's agency. And so I'd mapped out that plan as to how I was going to do that. I was going to work for another organization or partner with them for a while. And then I was eventually going to launch Bricks to Wealth myself. I would not have been able to do all of that and take that risk if I hadn't invested in property. And so I was, I'm in some respects, there is definitely some luck that goes with the property investment journey, but there's also a lot of calculated risk. And so if I look back at some of the properties that I've purchased, I bought in South Brisbane back in 2020. And that was when COVID had just hit. Everyone thought the bottom was going to completely fall out of the market. And I took a risk and bought that property. Now that property has performed incredibly well and the rent has gone up. And I built a granny flat on that particular property. So it's now got multiple incomes. It's by making some of these decisions that ultimately I've got to where I am now, which is where I have this portfolio of properties that have given me that freedom to choose, in this respect, my career. And so now what I love doing is helping other people to achieve the same thing and to build their own sort of property portfolio and wealth so that they can retire on their own terms. So for me, getting up every day, I love the fact that I'm focused on property investment. And it was always my end goal was to find a job I absolutely love. Now, it took me over 20 years, but I finally got there. So, I think if I think of 10 years from now, where do I want to be? I will be a lot closer to having paid off my mortgages. So that's my permanent place of residence. It's the investment properties that I've got. And I know that each year I get closer to paying that off, I am so much closer to complete financial freedom. Because as I mentioned, paying off the mortgage is, in my opinion, by far the most expensive cost that comes with owning a property. So as long as you're using a P&I approach, you then have a paid off asset. And of course, there's management costs and other things, but the rent will more than cover that. So it will be a very, very positively geared portfolio.
So
I said that will give me choices
and that freedom.
And for me, that's playing golf. It's going on overseas golf trips, doing more travel, which I absolutely love. And I think for every individual, everyone's got their own passions and things that they love doing. And again, if I come back to why invest in property, it's so that you don't have to work until you're 67. And hopefully by the time you get to 50 or 55, you're in control, you've got access to funds. Some people actually, they build up a property, say you build up a portfolio of 4 properties, you might sell one down, clear all the debt on the existing properties, and then live off the cash flow that comes from the other 3. So there are different ways that you can model out the end game for clients that ultimately enable them to get to where they want to get to.
I like that last gem that you said there, like powerful. So imagine let's say you have 4, you can sell one, all the cash that comes in there, you can pay off the others, and then they produce cash flow. The ones that you have now, so do any of them have a full-time tenant in there paying rent that goes towards the mortgage?
All of them.
Wow.
What? All of them. Yeah, all of them have full-time tenants. I think I mentioned my first property was the Gold Coast unit. And initially I put that out on holiday let. And this is where, and you only learn this from experience, the yield looked amazing. But by the time you took into account vacant periods, particularly non-holiday periods in the Gold Coast, by the time you paid the extra management and cleaning costs, it didn't make any more money than if I rented it out permanently. And one fact that most people don't know about the Gold Coast is they actually charge a higher council rate if you do a holiday letting compared to if you do a permanent letting. So even some of your costs go up considerably. I put all of my properties have long-term tenants in, and I've got 3 properties where I have dual incomes. So that's either a granny separated out, like I've actually built a granny flat, separated out a granny flat on a dual residential property. So what I've tried to do is manufacture different ways to maximize the cash flow and turn it into a positively geared portfolio.
Because even if you have tenants in there, and even if it's not covering all the full mortgage, even if you're only out of pocket 100, 200, 300, like that's still okay because you have an income. So, and how quick does it take to get a tenant, to now get a place? So, let's say you've got someone their mortgage. Of course, they maybe don't want it to be an empty house. How long does it take for them to now have a tenant that comes in there?
So in my experience, and look, again, this is just my experience, because I've generally bought in areas which have quite tight vacancy rates. I've never had a problem renting out a property. And as soon as one tenant has left, I've got another tenant ready to come in. Now, I always use property managers for my properties. Now, that comes at a cost. A lot of a lot of property managers can charge anywhere from 5.5%, including GST, all the way up to 10%. So, for instance, if you're buying in WA, and I learned this when I bought my first property over in WA, they charge 10% for permanent management or property management. So it's a very different market. But for me, I get a lot of value from that because they manage all the tenants. They do all the vetting of which tenants are going to go into my property. And that for me is crucial because you want to make sure your tenants are going to take care of the property. Look, in some cases, and you can, there's always, I should point out, as much as I absolutely believe property is a brilliant way to build wealth, it does come with challenges in that it is not a completely passive investment. You have to spend time managing your property portfolio. There are also some tenants who will come back with things that need fixing in a property. And some tenants are more likely to do that than others. There's always something that will go wrong. A boiler might break down, or door locks might need replacing. So you have to get used to the fact that there's going to be some cost involved. But as long as your capital growth is going up and far outweighing that, and in my experience, it certainly has done, it's a great way to build wealth.
I'll just get your quick advice, just like a subway from what you do. And the reason why I'm intrigued is, I've been in the space right now, but I don't do this in Australia. Actually, so we do it in Australia. So in this house here, we have like another room that has its own entrance, and we put it up for Airbnb. Last year, it brought $18,000 in income through Airbnb because where we live in Cogra near so like it's always producing that cash flow, right? And we don't own this place. We just pay rent here, and then the Airbnb covers like a lot of the rent. So my question for you is, so I do now that. I also did that in my country in Nairobi, Kenya, where it's like a lot of new places, apartments, buildings. So it's not off plan. It's already, people there. So basically it's getting a place that unfurnished, furnish it up, and then now being able to put in either a full-time tenant or have it up on Airbnb. Now, what advice would you give me to be able to serve clients in terms of, okay, you might not own this property right now, but let's say, for example, you get a place and you rent it, someone rents it to you for $500 a month, or that's about 800 Australian dollars a month, right? Unfurnished, but you furnish it up, do it really well. And then now you put it up for rent because it's furnished for about $1,500 a month, $1,600 a month. That's about $1,000 in cash flow there. And then it's about getting 3-4. So it's already, you don't have to own it. It's not as much capital, but having either a full-time tenant or Airbnb. What advice would you give someone like me and even potentially the clients there in doing this without owning property?
Yeah. Okay. So look, again, this is not my area of expertise. So I don't buy properties for clients so that they can do it for Airbnb. I'm sure there is a market for it. If you are talking about renting a property and then subletting it onto another tenant, you would just need to be very careful that you're meeting the actual tenancy regulations you have. So you obviously sign a rental agreement, and so you would need to be able to sublet that property on to meet the sort of the guidelines of your rental agreement. Look, I think you've talked a little bit about it, that if you are in a market that has really strong demand, and you can actually do all of that, you can find the vacant rental property, you can then furnish it and put the money into to achieve that, and you're going to then get a markup. It's another way to make money. And so, and again, it comes back to, my expertise is buying existing housing for clients and residential housing. Absolutely. I'm sure development for some people works brilliantly. Buying units, doing Airbnb. I have no doubt there are people that are very, very successful either buying Airbnb properties or even renting it, subletting it.
What's the biggest challenge of having a full-time tenant? Because I do also like the full-time tenant model where, like you said, let's say you've bought a house for someone, have a full-time tenant in there to be able to now just, take care of the rent and things like that. What's the biggest challenge? I know you touched on a little bit of things that things can go wrong and things happen. Is there any other challenges one would expect if it's like, okay, I'm paying off a mortgage, like you said, or I'm paying the rent here, and I just want a full-time tenant to come in there, look after my things? And do most of your clients, do they furnish their place or do they have it unfurnished?
It's unfurnished.
Yeah.
So, okay, so here are the pros and cons of a full-time tenant. The pros in my experience are you have a set amount of rent that you know is going to come in for the life of that tenancy. And you compare that to, say, a holiday letting, it's far more sporadic. Now, you might be able to charge a premium through Airbnb or however you might do it, but it is sporadic. And my understanding is there are also more costs associated with running an Airbnb business, the cleaning that goes into it, etc. So you'd have to understand all of that. Having a permanent tenant in, and particularly if you have a property manager that's managing it, I can literally sit back and not have to worry about that particular property or that tenant. Now, that comes on to the potential downsides. I have had scenarios where I bought one property in New South Wales, and from a capital growth point of view over the last 2-3 years, it's done very well. But it hasn't been the easiest property to manage. And that's because the person that owned it before me didn't do any work to the property at all. And so as soon as I purchased it, the existing tenants wanted everything fixing. Trees needed, trimming, gutters needed cleaning, shutters, things needed replacing. And so initially there was quite a lot of cost involved in upgrading the property to meet sort of where it needed to get to. And I think my advice on that is you need to understand the difference between what is essential to meet rental laws. And absolutely, anyone who's renting out a property should be meeting those minimum standards, particularly if there's any safety situation for the tenants. You've got to meet those standards. It's part of the game. However, you also need to make sure you're working with your property manager to ensure people aren't, let's say, taking the mickey. That some tenants, in my experience, and certainly this is a very small number, will constantly want stuff doing. And eventually you have to push back on that as to whether or not it is essential or not. Otherwise, you can put a lot of money into even a permanent letting. So, and that comes from experience. The other thing I would suggest is that when you're using a property manager, in my experience, when it comes to rental renewal, most property managers don't want to move the rent too much. So let's say hypothetically someone's paying 500. A lot of property managers will come back and say, let's increase it by $10 to $5.10. And my response is always, what's the fair market value for that rental? And it might be $5.50. This is, as an owner, I always do my own research into what properties are renting for, what equivalent properties are renting for, and I will ask my property manager to meet the market rent and to try and achieve that. Now, you do then balance. If you've got a great tenant, you may be willing to go slightly under market rent because you know they're a great tenant and it's worth doing that. So it's a bit of a balance. You want to keep great tenants, but you want to stay as close to market rent as possible. And if you do that year on year, obviously that has a big compounding effect from your rental income over time, and it helps you get positively geared quicker.
Powerful. Tim, I want to thank you so much for your time. I want to play a small game before we leave, and I'm going to say a word, and whatever comes to your mind, you just say it, okay?
Okay. This could be interesting.
Okay. Wealth.
Freedom.
Explain.
I think wealth can mean so many different things to different people. For me, wealth isn't necessarily the monetary value that most people would associate with it. For me, wealth is the ability to make choices. So if you consider yourself wealthy, that gives you the choice to travel, play golf, spend more time with the kids, whatever it might be that is most important to you. CEO. Exciting. To explain that, I have always wanted to own my own business. Like I did my MBA back in the early 2000s back in England. And my goal then was actually to start my own business. But it took me 20 plus years to do that because I never really had the idea as to what I wanted to do, and I ended up in corporate. And as I grew my family, it became a much more secure and safe way to earn a living. But I love what I do. I just find investing in property and now helping people to get great results investing in property is really exciting for me. The one thing I will say is CEO, particularly, I'm the only person involved in my business. So the only person anyone is going to talk to is me. Now, with that, as I'm sure you well know, Sujira, the whole administrative element that comes with running a business and everything else, don't get me wrong, there are some not so exciting parts of what I do, but most of it I love.
Powerful. Property.
Wealth. I think, and I know it's a bit circular, but in my own personal experience, and I've been doing this for a long time now, and I've had my own investments for a long time. I've only just started my business in the last couple of years, but I have a lot of experience investing in property. And I think, from my experiences, is an outstanding way to build. I think, we touched on the leverage factor in itself is a big factor there, that you can borrow someone else's money to invest in the property. And rent vesting, there's a reason why rent vesting is now so popular. If you live in Sydney, it's unlikely you'll be able to afford your dream home. But what you can do is build up a portfolio of properties. And then in the future, you might either want to keep that portfolio and build up a passive income and rent where you are. You might divest and sell some of those rental properties to buy your permanent place of residence. So again, I think it gives you the freedom to be able to live life the way you want.
Buyer's agent.
Time. And the reason I say that is if I think of what I really do for clients, and look, time is just one aspect, but I think it's a key one. Most clients I work with have really good really good roles, jobs that they do. They don't have the time to invest in property. And I certainly know that's how I was. As I said, it took me years to get my first investment property up and running. I think a buyer's agent should fundamentally save you time and manage everything. So the service I provide is completely end to end. It is the property strategy component, the market selection based on data. I work with agents to find the right property. I do all the due diligence around making sure that we're minimizing risk. I negotiate for the buyer. And by the way, the only way I ever get paid is from the fee the client pays me. Anything I negotiate along the way, whether it be property management fees or anything else, gets passed directly back onto the client. And I think that's an ethical way to work. So, yeah, I think just the time factor alone, if you think of how quickly properties have been moving in Australia, 1 year can literally mean hundreds of thousands of dollars in lost potential capital growth. And so a challenge I always had was paying a buyer's agent fee. I didn't want to do it because I wasn't sure what the value was. But I now know with hindsight, I would never have been able to build the portfolio of properties that I've now got without that expert advice.
Having someone just guide you along the way, save you time. You can focus on doing what you're doing, being with your family, working in your career, while you have someone to go out there, look at, and just come back to you. So, and how often do you meet with them, kind of like a strategy session? Do you come, okay, this is what's been happening, this is the progress. What does that client journey look like?
Yeah, it's a really good question. So obviously, while we're going through the initial, if I take a new client on, obviously the property strategy component is key. I will then actually do the market analysis and come back and present to my clients on the different markets I would recommend. We then align on which one we want me to focus in on. And it's important to only align on one or two. Otherwise, you have a bit too much of a spray gun approach. So you want to get the market right. And then I work with agents to identify off-market properties. And I'm very upfront. Sometimes it's an on-market property that we secure, but you've then got to buy it at the right price to know it's within the right market range. And then I go a step further and I then find a property manager for clients and I essentially make sure the property gets tenanted. And then 6 months later, after we've bought that property, that's then a good time to look at how things are going. And equally for me to touch base with clients on, okay, let's review the strategy that we came up with and how we're tracking towards that. And for some clients, they might be able to move very quickly and move on to the second one. For other clients, we might wait a couple of years before they're ready for property number 2.
When they pay for your service, like let's say they pay you and then you guys go on this journey. If they come back to you 2 years later and they're ready for that next one, is that another, like, do they pay you again for that, or is that payment that they give you is like a kind of?
No, so it's essentially a per property fee that I charge clients. And the way I work is I charge an upfront fee, which is around a third of the cost, because I actually have to pay external providers for the software I use to model the strategy. I also obviously have to pay for a lot of the data analysis metrics, and I use multiple sources and pay a lot of money to make sure I've got access to the data to find the right one.
Perfect. So what we'll do is for the people who see so much value and interest in this, what's something that you can offer them for, like, is it a coaching session or an audit, something that they've come in and they've watched this, they can come in and say podcast with the Rubasha family, that they can come in and we can give them access to a meeting with you? What's something that we can give them for anyone who's come in on YouTube and sees value in this, or LinkedIn, and then wants to come in and work with you?
Yeah, also, look, I am very happy to have a completely complimentary session with any of your clients that come through, Sujir, or people that have watched this podcast, and no commitment expected at all. It's really just a chance for me or for your listeners to ask me questions. I will support them as best I can. And yeah, we sort of take it from there. And the other thing I would suggest is the website brickstowealth.com.au. That's actually, it's got a lot of content on there. It's equally got a lot of the podcasts that I've done for other great podcast providers like yourself. So I've done Smart Property Investment, Pizza and Property. And so those also hopefully give some good insight into my experience and adds a bit more value.
Yeah. So you guys can go listen to more content. And, when you write to Tim, just make sure you mentioned you came from here, and he'll be able to help you with any questions that you guys have. So thank you so much, Tim, for joining. That was really, really fun. Time goes fast when you're having fun. And I want to thank you. Yeah, it was great. And as I said, we can come up with different topics and go on this journey to provide value to the people who are listening.
Look, Sujira, it's been great talking to you, and I hope it's been of value to your listeners.
It has. Okay. See you later, Tim.
All right. Take care.
Hey, what's wrong? Bro, I'm stressed out. I'm running my business. I've got to serve my customers, but I need more customers coming in. I can't keep relying on word of mouth. Why don't you just use ETS Rubasha Media? Who? Well, with AI now, what they do is they go in, get your perfect clients, bring them in front of you. So all I got to do is run my business, and he brings me opportunities. Think about it. You speak to 3,000 of your ideal customers, convert 1% of that 3,000. That's 30 people. 30 people in a room with you. Can you convert that? Of course I'll close them. I'm good at what I do. I just don't have time to be going and looking for my perfect client. Focus on what you love doing and let them bring you customers. When you win, they win, commission, cha-ching. Sujira Rubasha, huh? Yeah, Sujira Rubasha. Go and Google them, man. Come on, take it to the bank.
If you really enjoyed this video, make sure to click here, and I'm sure you're going to love that one.